I'm Jen Rogers. Today, we're going to be talking about the unique financial hurdles that women face and the best ways to overcome them. I'm joined by Empower's President of Personal Wealth, Carol Waddell, and Michelle Brownstein, Vice President of Empower's Private Client Group. We have a great conversation to get to, but we really do want to hear from you. First of all, you can help us out by taking our poll question. It is about how you and your partner might be feeling and dealing with money differently. So take that for us, because that's going to inform our conversation a little bit, and leave some questions in the chat, because really you have the best questions and we want to be able to answer them. So put them in there. But just to get us started right now, I think we all know we are in these sort of unprecedented market times. We've come out of a pandemic. We are dealing with issues of inflation. The economy is, as we've heard already today, really stressing a lot of people out. And women, in fact, are feeling much more stress than men. So, Carol, what are you hearing from your customers right now?
Yeah, it's an interesting question. We have certainly seen a huge spike in terms of customer contact year over year. We take millions of calls every year for context. But what's interesting is the duration of those conversations has increased by more than 20%. We find that our customers aren't really making rash decisions. So they're not making big changes to their investments, but they're digging a little deeper. They want to understand, what's happening with regard to the market volatility and the inflation and the looming recession, and what should they do about it, if anything at all. What we do find, though, to your question, is most people are staying the course. They've created their investment strategy. They're sticking with it. Sometimes maybe they'll tweak it to change some of the assumptions that went into their plan. But for the most part, people are not making changes to their investment. What we do see is, in response to inflation, some of our customers delaying large purchases. So things like a new car or maybe taking a vacation. They're waiting until their dollar regains its purchasing power, that has been impacted by inflation.
So Carol talked up having a plan, and obviously having a plan in place is a great thing. There's some people that are a step ahead on that, and other people that maybe are kind of getting woken up here. Let's talk about women, though, Michelle, in particular, because at some level you think, okay, everyone's preparing for retirement. We all got to kind of do it the same. But it is different for women in some cases. How do they need to prepare differently than men? And why is that exactly?
So there's a lot of different factors that go into a retirement plan. And I think the key difference between men and women in many cases is we're all aware of the gender pay gap. That's not the elephant in the room, because we're all openly talking about it. But if I'm saving a set percentage of my income every month or every year, and I'm saving the same percentage as my male counterparts, but I'm making less money, that percentage doesn't get me to the same place. And so I think the first key component is to not work off of necessarily percentages, even though that's how many of our retirement plans allow us to elect how much we're putting in, but instead to say, how much money in dollar terms do I actually need to save to achieve my goal of maintaining whatever lifestyle it is I want to maintain when I get to retirement? So that plan needs to hinge off of, where am I trying to get to? Where am I at today? How do I make up the gap if there is one? And that comes down to having a great budget, sticking to it, evaluating that on an ongoing basis, because in many cases, I'll talk to someone, they say, I have a plan, but they haven't revisited it or checked in on how well they're sticking to that plan in years. Well, the best laid plans, as we all know, if they're not followed, aren't going to get us to where we need to go. So it's really that ongoing maintenance that I think is really important, and recognizing that I need to be thinking in terms of dollars, not percentages, which is how many of us operate when it comes to our finances.
So let's dive into that a little bit more, Carolyn. We're already getting some questions in here. Mary Mills asking, started saving for retirement too late. I'm sure you're not the only one on here. Best strategies for catching up. And Carol, that really goes into what we're talking about also, I think, with the gender pay gap. Because if you feel like you're already behind, look, everyone only has this finite amount of money to work with that they're taking in. So how do you make up for either the gender pay gap or the fact that somebody like Mary is like, I've started too late? So how do you play catch up here?
Yeah. So thoughts on the gender pay gap. There's definitely some differences there, and that gap is starting to narrow. But when we look at it, for every dollar a man earns, a woman gets paid 82 cents. So there still is a gap, but it's lessening. And I think, on top of that, there are other factors that women deal with is often a lower level of confidence when it comes to investing. Often they are the caregiver to children or parents. They have the benefit or burden, I guess you could say, of living longer than men do, and sometimes start later, right? To the point that was just made by Marion about starting a little late, getting started. I think the most important thing is to start whenever you can and save as much as you can. So the one benefit about saving a little bit later is that you could save more. Hopefully you have a little bit more discretionary income now than you did have at younger ages. And you can take advantage of a catch-up contribution that's available to many individuals, that enable you to save beyond the traditional IRS limits. So get started as soon as you can, save as much as you can. And I think meet with an advisor, and it's probably a really good time to prioritize where you're saving and where you're spending your money. But it's never too late to get started.
Okay. Got that, Mary? It's never too late. Even if you do it like tomorrow or next week or next year, it's not, you haven't completely missed out here. So we talked about the gender pay gap a little bit, and Michelle, I want to talk with you about another hurdle that looks to be, touched on and important, and that's the investment gap. And then we're going to get to some of the questions that are coming in here. What is the investment gap exactly for people that don't know what it is, and how can you work against it?
Sure. So the investment gap is simply that men tend to be more confident making investment decisions than women. That can come from sitting in a room with a group of people and the husband and the marriage being asked about the financial matters just as the default, even though the wife should be very involved and just as read in on the plan as the husband is. So societally, that's been the focus, but it also comes down to confidence, where we did a study, or there's a few different studies on this, but some interesting stats just to cite. Men tend to be if we poll men and women, 50% of men are very confident making financial decisions. The number for women is about half that, so just over a quarter. And that's not always a bad thing, because sometimes that kind of confidence can lead to overconfidence and thinking that men specifically can sometimes believe that they have more control over things like the stock market than they actually do, where women tend to take a longer term view. And there are a lot of studies that actually show women are better investors because they're not dancing in and out of the market and trying to time things, and tend to be a little more patient. So I think part of that investment gap is comfort level, knowledge, who's been the default decision maker for a long time. And I think all of us as women really need to focus on, how do I take control? Part of that's just starting a conversation and not being afraid to ask any questions. So I love all the questions coming in the chat. That's wonderful to see. But asking those questions, whether it's of a financial advisor, friends and family members who you may see as successful, and that doesn't mean you have to get into the nitty-gritty details of your financial situation. It could simply be asking someone who you see, again, as fairly financially successful, how have they implemented and stuck to a budget? How do they save with discipline? Those high level discussions, I think, are something that we can all benefit from. But I do think that also will help close the investment gap if we're just talking more about it and asking our questions. And the question may be to a financial advisor, I don't even know what I should be asking. So can you just give me the basics and help me define what I should be really thinking about now? And that's a great way to start that dialogue.
So as you've been speaking, we've been watching some of the poll results come in, which sort of touch on this area as well. So in terms of with your partner, where you're always on the same page on money, we had about 7% said on the same page all of the time. About 5% said, no, and it's a problem. But the overwhelming majority is sometimes yes, sometimes no. And 43% of people are single on here. And so, look, I want to speak to, that group as well, right? That's a huge part of the population. And there are specific challenges there as well. And we've been getting some questions in here, Carol, that I thought could be interesting for you in this capacity. For people that are looking to change jobs right now, there's people that are looking maybe to start, I think it was Barbara talking about starting a second chapter. I've retired, but I need to start my second chapter with solid income coming in here. Kind of navigating this economy right now to sometimes make a shift, sometimes go back in. How do people know when the right time to do anything is? Do you have some crystal ball that you can take out?
I wish I did. I might not be in the seat right now, but I think, as you're changing jobs and, changing chapters in your life, it's a great opportunity to take stock in what you have today. So I would suggest that go online and look for some planning and budgeting tools. Empower.com has some free ones that you can use. You can pull together everything that you own and everything that you owe. So all your assets and all your liabilities or debts in one place, and get a sense of where you stand. So I think it's really important when you're starting you're making some change in your life that's going to have financial implications. Let's get your arms around where you stand today from a financial perspective. Once you have that in place, if you feel comfortable making investment decisions and as you transition, that's great. If you don't, like some of the questions pointed to, it's a great opportunity to work with an advisor and maybe talk to a friend or family member and get a reference for who you might be able to work with. But they can help you navigate some of those changes, because at times like changing jobs, it's an opportunity to either maybe keep money with your current employer or move your money to your next employer, or consider investing it in an IRA or cashing it out. We would highly recommend not cashing that out because you're going to face big tax penalties. But each of those individual scenarios has implications. So it's really great to talk through that with someone else. A professional advisor would be my recommendation. But of course, just, a trusted friend or family member would be important. The most important thing is to have a conversation around it and understand the specific options you have and what the implications might be.
Sure. And an additional thought, if someone is looking to transition, start the next chapter, looking at new opportunities, that's a really key point in my eyes that you should be thinking about your worth and negotiating at that point in time. I think it's always easier, at least in my experience, it's always easier to negotiate at the start of a new employment as opposed to once you're kind of in the mix and you're entrenched. It's a bit harder to move the needle down the line in many cases. And one thing that I have found helpful in my own career is negotiating as if I'm negotiating on behalf of someone else, whether that's a sibling, a friend, a spouse, a child. When we take ourselves out of it, it's easier to push in many cases. And that's something just to think about, that when you're at this transition point and potentially looking at new opportunities, that negotiation and making sure you ask for what you're worth, potentially ask for a little bit more, you might get it. Ask for what you're worth. And that can also help us start to close the gender pay gap. I think, in my time managing a group, most of the people who have negotiated hard when it comes to bringing them on have been men. And I think that may be contributing in some cases to that gender pay gap, and something that we should all be thinking about of, not just asking for the bare minimum that we need to get by, but really kind of pushing the envelope a little bit.
I like that idea of imagining you're doing it for somebody else. In some weird way, it does seem like a little bit easier to do. So Michelle, one of the other hurdles that we've talked about and you mentioned is around longevity. Mm-hmm. So of course, it's also a great thing that women live longer and having a long life. It's good. But when you look at the poll results, right, with 43% people being single, are there some specific challenges around that as well for a single woman out there?
There's no safety net for any of us. So I think that's one thing to keep in mind. The piece I see more commonly with women, whether married or single, is women have a much harder time than men, in many cases, prioritizing themselves financially. And what I mean by that is there's always financial trade-offs. So with my next dollar of savings, I could choose to save in my retirement plan. I could choose to save in a joint account with my husband. I could choose to save in a college account for one of my kids. Now, as a mother, it's hard for me to think, okay, pay myself first. And we've all heard that, but that trade-off is real. I want to take care of my kids. I want to put the money in their college fund. That's just kind of my nature to do that. And so single, married, doesn't matter. It's so important to remember that you cannot get a loan for retirement. You can get a loan for college. Your kids there are other ways to pay for that higher education if that is a competing goal, but you have to prioritize your long-term financial well-being over others. If I don't buy my kid the newest toy, gadget, whatever, or I don't buy the newest iPhone today when it comes out in the fall, I'll be okay. What I won't be okay with is if I can't, support my lifestyle when I want to retire down the line. So it's just an important thing to think about, that, again, you have to come first, and that can be hard for us to do.
I'll add on to that, Jen, if you don't mind, on the longevity front. We certainly find that women often live longer than men, 6 years on average. And I think a couple of things come into play here is, one, this is when the savings rate really, really matters. Saving as much as you can, as early as you can for retirement is generally always a great idea. I don't know about you, but I have yet to meet anyone that has said they've saved too much for retirement. So that savings is really important. The second one is around healthcare costs, right? So when you think about longevity, you might be paying for healthcare a little bit longer. It's really a good idea to take a look at if you're a candidate for long-term care insurance. We found that people that have saved about $500,000 to $2 million in assets are good candidates for that. If you save below that amount, you might want to lean on Medicaid. And if you saved above that amount, you probably can afford the extra healthcare expenditures. But long-term care insurance is especially important if you have a history of family health conditions. And then the third recommendation I would have around longevity, and it's one of my favorites, would be health savings accounts, HSAs. So if you have a high deductible health plan, you can use an HSA to set aside money to pay for medical expenses in retirement. And unlike an FSA, there's no use it or lose it. So a lot of us are familiar with FSAs where you put aside some money and that pays for current healthcare expenses. HSAs are really a retirement healthcare vehicle. And so it has a triple tax benefit. You can make contributions on a pre-tax basis. They grow tax-free, and they can be withdrawn tax-free for qualified medical expenses. So, HSAs can be great. And again, use them as a retirement vehicle, again, to cover against longevity, but don't confuse them necessarily with FSAs, which are to cover current healthcare expenditures.
That's great. Carol, you actually read the mind of Shauna here, because she asked about using my HSA to save and invest and that being a good way to add to resources in retirement. So Shauna, you got your answer there. So let's just run through a couple of the questions that are in here, because I think it's actually pretty instructive, and it goes along with some of the data that you've had at Empower just on personal finance and how intimidating and overwhelming it can actually be. I think that your guys' data had shown that 41% of women had said they don't know where to start. And Michelle, we had a question in here from Dina saying, what's the best way for someone who's 49 and is just taking control financially and learning about investments, and some of the language and the terms can be overwhelming, and I would not want to be discouraged before I even begin. So that's somebody that seems to be in that camp. What do you tell them?
First step is just to figure out where you're at, because you cannot put a plan in place and actually know where you're trying to get to if you don't know where you're at. And that can be as simple as taking your pen to paper or using an online dashboard like the one Empower provides. There's others out there as well, to just see where everything's at. Meaning, how much do I have in debt? How much do I have in assets? That could be real estate. That could be your 401k. It could be a brokerage account, a checking account, a savings account. Just what lines up on the asset side, what's on the debt side, where am I at? That's how you calculate your net worth, to say, okay, here's where I really am today. Then I need to think about cash flow. How much do I have coming in every month? And then where does it go? So I spend this much on my mortgage, this much on my utilities, this much on my daily coffee habit. And I go through the list of literally everything I spend in a month, and then think about those big ticket items. So annual items, meaning taxes or a vacation, where's the money going? Then once I know what's actually happening, I can start to think about putting a plan in place. So the first step is, again, just taking stock. Without that, you can't put a good plan in place. So that's where I would start, Dina. And then as you think about where you want to go, that can be an age-based goal. I want to retire when I'm 65. It could be a lifestyle goal. I want to be able to work for the next 5 years, take a year off to travel, then go back to work. There's lots of different ways this can play out. But once I know where I'm at, I can then put that longer term goal in place and try and put a map together. And it can be overwhelming. So I think Carol and I both mentioned it. That's where a financial advisor can be really helpful to bounce ideas off of and talk about, I'm here, I'm trying to get over there. I have no idea how to do it. And having that discussion I think is really helpful, whether it's with an advisor or a trusted, friend or colleague that has a bit more financial savvy. But I would say when it comes to taking control, there are no bad questions. It's better to ask a question and maybe feel a little sheepish as opposed to just sitting there wondering and getting overwhelmed by it.
And Amy, I hope that answered your question too, on here about, retiring and trying to figure out where you're going as well, kind of getting that plan. So Carol, I was just quoting a little bit from that research, the recent research that you guys have just published, Money Talks. So there are people out there who feel good and confident about their financial situation. So what can we take away from them? Like, what are they doing differently? Is there stuff that we can learn from them for the rest of us?
Yeah, absolutely. I think the things that in Money Talks, the people that feel good about money have actually started working with a financial advisor. So again, and Michelle pointed this out as well, it's a safe place, right? So if you can identify an advisor to work with, I would highly recommend that you go to a trusted friend, family member that is working with someone today, and maybe work with that individual, reach out to them and create that plan. So people that have worked with an advisor, have collected all this data, have put their full picture together, and are talking about it with their friends, their family, their coworkers, are really feeling better about it. And it's interesting. I think it was 6 in 10 people think that it's important to talk about money matters, but 6 in 10 people also do not talk about money matters. So have the conversation, reach out to someone that you trust and get that plan in place. That's really the big difference between people that feel good about where they are and people that don't feel good about where they are. You have to start with the baseline.
So you're already 1 step ahead by being here, and 2 steps ahead if you've been in the chat, because you've already been talking and discussing this with us, because that really is going to help move the needle forward, is what all of this research shows. So Michelle, we've just a minute or two left here. I mean, what are your closing thoughts on what women can do here to set themselves up for success? Which, remember where we started, it's a pretty unprecedented time in the economy. So just a minute left here. What can women do?
I think there's 3 big things. First, know where you're at and where you're trying to get to. So that's the first step, is just acknowledging where I'm at and what is my goal. Second step is putting a plan in place and actually adhering to it, checking in on it, making sure I'm using the plan, not just I have this great plan that sits in a closet that I never look at. And the third is talking about this, whether it's with an advisor, with your spouse, with your friends. That discussion is so key to making sure that you are staying current, have a plan that evolves as your life changes, as the markets change. So I think those are 3 big takeaways of know where you're at and where you're trying to get to, have a plan that you're using consistently, and talk about it.
And that's good advice for everybody. That is all the time we have. Thank you all so much for joining us. Thanks to Empower. Thanks to Carol and Michelle.